The following instructions are being recorded for the personal use of Fred Duckworth, Chief Strategist at Narrowgate Trading, and the originator of the Numerical Price Prediction system for trading foreign currency pairs, otherwise referred to as Forex. This video is intended to serve as documentation of the fact that Duckworth is indeed the author of this methodology, and to also act as an additional backup resource in case Fred misplaces or loses access to other physical or digital records of the system. Accordingly, these instructions are likely to contain details no one else will be able to interpret correctly. This is because, unlike every other trading system with which Fred is familiar, which define moving averages in terms of periods, Duckworth defines them in terms of temporal values, giving him the ability to quantify in which direction and by how much price is moving over any chosen time interval in terms of speed and motion rather than price. That said, for assessing the market from a swing trading standpoint, Numerical Price Prediction suggests consulting primarily with a 4-hour chart configuration, seeking opportunities to trade in the direction of the matching slopes of the bold black 2 1/3 day and the bright green 4 2/3 day baselines, but only after observing the blue 4-hour price flow coming out of pullbacks from behind the contrarian side of the purple 8-hour baseline, ideally after the corresponding lower panel oscillator has crossed above the 1.47799 top level or below the minus 1.47799 bottom level of the price anomaly channel. Then again, if one would like to evaluate things from the perspective of an even longer-term time frame, there is always the option to consider entering positions in the direction of the matching slopes of the bold crimson 9 1/3 day baseline and the thin dark slate blue 18 2/3 day baseline as the bold black 2 1/3 day moving average is coming out of pullbacks that were on a trajectory opposed to the longer-term price flow to resume a course aligned with it. On the other hand, moving down to the hourly charts, the primary focus switches from the 2 1/3, 4 2/3, 9 1/3 and 18 2/3 of a day measures to the 2 1/3 day baseline exclusively, with pullbacks in the 2 1/3 day price flow tracked by the 2 and 4-hour baselines, though the 15-minute chart suggests that the 2-hour measure should take precedence. And speaking of the 2-hour measure, this transitions us to intraday trading, where the 2-hour baseline is king. In this context, or at this level, the goal is to enter positions as prices coming out of 15-minute pullbacks to the contrarian side of the rather unstable 30-minute baseline when the baseline's positional relationship is in alignment with the concurring price flows of the 90-minute and 2-hour measures. So, as we head into 2025, this constitutes the initial plan of action that will be guiding the trades made here at Narrowgate. We trust anyone viewing this recording will be guided by a plan that is just as well defined, or even better defined, in an effort to optimize the opportunities for success in the coming year. In the meantime, good luck to everyone, and until next time, stay awesome. Peace out.